All right, so renewable energy. Everyone seems to be talking about it. And this company, Brookfield Renewable, well, they're right in the thick of it.
Yeah, definitely a hot sector right now.
You sent over this article, and it's got a pretty bold title. 3 reasons to buy Brookfield Renewable stock. Like, there's no tomorrow. And I gotta say, some of those returns they're talking about, almost too good to be true. No. What do you think?
Yeah, well, Brookfield Renewable, they're definitely operating in a sector that's, experiencing this kind of explosive growth right now. The world is really shifting toward cleaner energy, and they seem to be very well positioned. But you're right. Anytime you see those kind of big promises, those big numbers, you really got to sort of peel back the layers a little bit and just see what's really going on, what's driving those numbers.
Exactly. That's why we're doing this deep dive. So this article, it doesn't waste any time. It jumps right into some pretty impressive figures. They're talking about a 12% projected annual growth in FFO. Now, I know we've got some savvy listeners out there, but just in case, that's funds from operations, which is like the key metric for these kind of companies, right?
Yeah.
On top of that, they've got this long history of like consistent dividend increases. We're talking since 2001. And then they go on, they even hint at this potential for, get this, mid-teens total returns. I mean, are we looking at like the investment unicorn here or what?
It's a captivating story, that's for sure. And those figures, they are impressive. I won't deny that. But I think, as with any investment, right, particularly one that's, being touted as, the next big thing, it's important to approach it with a little bit of healthy skepticism. I mean, past performance, it can be an indicator, but it's not a guarantee of future returns.
Okay, yeah, that's a really good point. So let's unpack this a little bit. This article really, really hypes up Brookfield Renewable's dividend. And I mean, I can see why. I mean, they're currently offering a yield of over 4.5%, which is, I mean, significantly higher than, your average S&P 500 yield. And then on top of that, they're projecting annual dividend growth of between 5 and 9%. I mean, come on, that kind of passive income stream, it's got to be pretty tempting for any investor.
Yeah, it's very tempting, for sure. But I think, the question we need to ask is, can they actually deliver on those promises long term? And I will say, to the article's credit, they do touch on that a little bit. They try to highlight some of the factors that contribute to a sustainable dividend.
Okay, like what? What should we be looking for?
Well, first of all, Brookfield Renewable, they have a very stable cash flow, right? About 90% of it is generated by what are called long-term power purchase agreements, or PPAs. So essentially, these are contracts that guarantee Brookfield Renewable a steady stream of revenue. So, rain or shine, they're getting paid for the energy their projects are generating.
Okay, so that's one piece of the puzzle. So we got this sort of predictable income. What else makes their dividend seem so, sustainable?
Another factor is their payout ratio, which is quite conservative. What that means is basically they're not paying out all of their earnings as dividends. They're keeping a healthy portion reinvested in the business, which is actually a really good sign for long-term stability and growth.
So they're not just like going all in on trying to attract investors with this like flashy dividend. They're actually being responsible about it.
Yeah, exactly. And the third kind of element that really supports their dividend sustainability is their balance sheet. They have a history of managing their debt effectively, which is super important, especially in a sector like renewable energy where, there can be some financial ups and downs.
Right. So it's not just about a high dividend yield today. It's about their ability to actually maintain those payments in years, even decades down the line. And for investors, especially those who are really enticed by like those potential returns this article's laying out, you got to understand those underlying factors that actually support a stable and growing dividend. That's key.
Absolutely. And those factors, they become even more important when we start to consider the specific growth drivers that are fueling Brookfield Renewable's optimistic outlook, which, of course, ties directly back to their ability to sustain those attractive dividends.
Okay, so speaking of growth, this article does not hold back. I mean, they point to like a handful of drivers that really have them convinced that, Brookfield is on the fast track to even bigger things. One of the key things they highlight is this like inflation escalation that's built right into their contracts. So basically, as inflation rises, so do Brookfield's profits, right?
Right.
On top of that, they've got this massive amount of older contracts coming up for renegotiation. We're talking a whopping 6,000 gigawatts worth, and they're basically betting that they can lock in much more favorable rates this time around. And then, of course, there's the crown jewel, a development pipeline bursting at the seams with 200 gigawatts of potential projects. It's a lot.
Yeah. And that's really where things get interesting. See, to really understand the potential impact of those growth drivers, you have to connect them to the bigger picture of what's happening in the renewable energy sector as a whole.
Okay, so help me connect the dots here. What's the bigger picture? Okay, so help me connect the dots here. What's the bigger picture?
Well, it's like we're talking about this perfect storm brewing in the renewable energy sector, right? You've got this surging demand.
Right.
You've got these old contracts that are expiring. And you've got companies like Brookfield Renewable who are ready to, capitalize on those opportunities.
Yeah.
I mean, the demand for clean energy, it's not just growing, it's skyrocketing. You've got governments all over the world, they're setting these ambitious renewable energy targets, right? Driven by, concerns about climate change, energy security. Then you've got consumers who are more and more demanding those clean energy options. And here's the thing, the cost of these renewable energy technologies, especially solar and wind, they've plummeted in recent years.
Right, which makes them even more attractive.
Exactly. They're more competitive with fossil fuels than ever before.
Okay.
And that's where those older contracts, that's where they come in. Because a lot of those were signed years ago, right? When renewable energy was, frankly, more expensive. So as those contracts expire, Brookfield's in a prime position to renegotiate potentially at much higher rates that reflect the current market.
Okay, so that's built-in potential right there, just from renegotiating those contracts. What about that huge development pipeline we were talking about, the 200 gigawatts? How does that factor in?
Well, that's essential for translating those favorable market conditions into actual tangible growth. I mean, it's one thing to have this demand for clean energy, but you got to have the projects ready to actually meet that demand.
Right, you got to have the supply.
Exactly. And that pipeline does exactly that. It secures their future growth.
So they're not just riding the wave, they're building a bigger surfboard.
I like that. That's a good analogy. And just to put that into perspective, that 200 gigawatt pipeline, it's roughly the equivalent of the entire installed capacity of wind and solar in the US right now.
Wow. Okay, that's massive. All right, so let's talk price tag here. This article, it claims that Brookfield Renewable, it's trading at a lower multiple of its earnings, or FFO, compared to the S&P 500. And they seem to be suggesting that this means it's undervalued. So are we looking at a screaming bargain here?
Well, that's the million-dollar question, isn't it?
Yeah.
And while a lower price-to-earnings ratio, it can be enticing, it's really important to remember that valuation is just one piece of the puzzle.
Right, right. So what else should we be considering? What's missing from this rosy picture that they're painting?
Well, the article, it focuses very heavily on the positive, which is understandable. But, any savvy investor, they know that no investment is without risk. And in the case of Brookfield Renewable, there are some factors that I think warrant, further investigation.
Risks, right. Every investment has them.
Yeah.
So what kind of risks are we talking about with Brookfield Renewable?
Well, one thing the article kind of skims over is, competition. The renewable energy sector, it's booming, yeah. But that also means that, everyone and their brother wants in on the action.
Right.
Brookfield Renewable, they're not the only player in town anymore. They're facing increasing competition from, you got these big established energy giants, but you also have these smaller, ambitious startups,
Right.
And all that competition, it can put pressure on their margins. It can make it harder to secure those, those really favorable contracts.
Yeah, competition, that makes sense. I mean, a rising tide lifts all boats, but it also brings more boats into the harbor, right? Anything else that's got you, raising an eyebrow a little bit?
Another big one is the regulatory landscape. The renewable energy sector, it's heavily influenced by government policies and incentives, right?
Oh, yeah.
Changes to things like, feed-in tariffs, tax credits, renewable energy targets, all that stuff, that can have a huge impact on a company's profitability.
It's easy to forget that we're not just investing in a company. We're investing in a company that's operating within this whole other ecosystem.
Exactly.
And those can shift pretty dramatically sometimes. Any other red flags investors should be watching out for?
Well, debt levels are always something to keep an eye on, especially in industries like renewable energy, which are very capital intensive. Brookfield Renewable, they do have a pretty decent track record of managing their debt, but it's always a good idea to really dig into the details of their debt obligations and just understand how that might affect their, financial flexibility down the line.
Right. So it's kind of a balancing act, right?
Yeah.
They need enough debt to finance those ambitious growth projects, but not so much that it becomes a burden.
Exactly. Yeah. Finding that sweet spot is crucial.
All right. Well, this has been a really interesting deep dive. I mean, we started with this article that was, very, very optimistic about Brookfield Renewable. And I mean, like you said, the potential is definitely there. But you've also, really highlighted the importance of looking beyond just the hype, asking those tough questions and considering, both the risks and the rewards.
Absolutely. And, that leads us to, I think, probably the most important question for any investor to ask themselves. Based on everything we've talked about today, the potential, the risks, the kind of, the ins and outs of this industry, what additional research would you personally do before investing in Brookfield Renewable? What information do you need to feel confident in your decision? Because at the end of the day, knowledge is power.
Knowledge is power, especially when it comes to investing. All right, that's all the time we have for this deep dive. Thanks for listening, everybody.